An anonymous source within Amazon just leaked that they are expecting to sublease anywhere between 10 and 30 million square feet worth of warehouse space. And if you've watched any of my other videos, you'll know that I make my livelihood in this industry, and I also have the majority of my net worth directly invested into industrial real estate. So in this video, I'm going to answer two questions. One, will this news impact the market? And two, is it going to change my personal strategy? I'll give short answers first, then elaborate after. So first, yes. If Amazon does publicly market 10 to 30 million square feet for sublease, it will affect the market. But second, no, I'm not changing anything on my end. But let's jump into this further. The biggest user of warehouse space, Amazon, announced earlier this month that they had a 3% decline in e-commerce sales. And this news came after they took on a considerable amount of new space over the past few years. So it really shouldn't be surprising that after growing so aggressively, a slowdown in sales prompted them to reconsider how much warehouse space they actually needed. There are a couple of very important points to note about this though. The industrial real estate market in North America is about 20 billion square feet, so depending on how much they actually sublease, it will only amount to 0.05 to 0.015% of the entire market. In the context of how large the market is, this amount is simply insignificant. However, when the largest e-commerce company announces they have too much warehouse space, it will undoubtedly cause other companies to stop and take notice. I'd find it surprising, if not outright reckless, for other companies not to do an audit of their requirements going forward. This leads to the question on everyone's mind. Will this spell the end of the industrial real estate boom? And my answer to that is a resounding maybe. And while I'm just a guy talking in front of a bookshelf, anyone who has a different opinion must have one clear crystal ball. And while I don't have an answer on what's going to happen, it has led me to sell all of my US-based industrial REITs, which I mentioned in a video back in early May. At the time, I saw Amazon's report of a decline in e-commerce sales and thought there was some inherent imbalance in one REIT in particular, Prologis, which was still forecasting a 22% increase in rental rates. I simply can't buy into the narrative that we'll continue seeing rates at this level, particularly when the feds are actively trying to slow down inflation. Interest rates are rising, and some slowdown in economic activity is to be expected as a result of all this. So by extension, construction prices should ease off, and the rampant growth we've seen in e-commerce is already starting to slow. I sold my stocks simply because I felt that there was too much growth being priced into them, but I'm still very bullish on physical real estate. So with that in mind, here are my guesses for what I see for the balance of 2022. First, any landlord that projected their rental rates to grow 20% or higher this year are likely to be disappointed. The feds do not want to see another 20% increase in warehouse rates, as those increased costs undoubtedly work their way through the system in the form of increased inflation. There is an organized effort to prevent this exact type of thing from happening. Second, this could become something more concerning if other companies start following Amazon's lead and also offload some percentage of their warehouse space. Interestingly though, warehouse space is often thought of as being less expensive than a company's transportation costs, so there still might be some strategic reasons to hold on to warehouse space. There are also supply chain issues all around the world right now, so it wouldn't be surprising to see companies keep warehouse space for no other reason they want to have some extra safety stock on hand. But it is undeniably a risk to the market that companies downsize their requirements for warehouse space. Third, some increase in vacancy is not a terrible thing either. I say some because I don't know what the optimal number is, other than these ultra hot markets with sub 2% or sub 1% vacancy isn't healthy either. Markets with these historically low vacancy rates tend to leave companies scrambling to find space, and it shifts a lot of the power to the landlord. I think we can comfortably increase vacancy rates 300 to 400 basis points in many markets without causing mass hysteria. That would require considerably more vacancy than the 10 to 30 million square feet that Amazon is contemplating. Fourth, industrial real estate will perform a vital function in the global supply chain, and investors should be taking a long-term outlook regardless of these types of aberrations. Perhaps it's just an investing flaw of mine, but I tend to look at stocks with a short to medium term, whereas I have a much longer outlook for physical real estate assets. I don't need double-digit rental growth either, and I can't imagine many prudent investors building a pro forma with these super rosy outlooks. If I can get nominal increases, principal pay down, and some tax benefits, I'm still very, very optimistic for industrial. Admittedly, I don't have a clear idea on what impact we'll have on the market, but I do know it's going to be an important topic to follow. I'll be looking at it quite closely, and in addition to other real estate news in the industrial real estate sector, I recently started a newsletter where I summarize important topics into a weekly roundup. It's completely free, Sign up at industrialinsiders.com. I'd love to hear your thoughts in the comments below. What do you think Amazon's decision to sublease a bunch of space is going to do to the market? Thanks for watching. Catch you in the next video.